Once you understand supply and demand and know how to find it and how to actually use it, it's going to drastically improve your ability to be consistently profitable. I'm going to be going over the benefits, what it is, how to find it, and show you a simple strategy that you can implement right away, and then give you some examples of how I actually use it. Supply and demand is an area of interest where there are a ton of sellers or buyers, and in this case it's mostly related to big banks or hedge funds because they're the only ones that can move a stock so dramatically and choose a direction that the stock is going to go. You and I, retail traders, cannot do that, but if you position yourself with the big money banks, you can take advantage of those moves. So before I show you a real example, I want to illustrate very clearly what I'm looking for, so that way you can conceptually understand the idea, so when you're looking for it, it's easier to find. So what you're looking for are these shapes, these V shapes and consolidation with a direction that has been picked. Now what you'll notice is that there is actual very, very sharp direction. It's not smooth, right? It's not like this. Although you can trade that, that's not what we're looking for. We're looking for the big banks' dramatic moves, and only big, massive, smart money can move the stock market the way that this is showing you. Now, these two shapes are very important to understand because if you can just look for these shapes, then it can help you identify where is supply and where is demand. In this case, with these V shapes, demand is right here at the very bottom. And then if you connect these V shapes, supply is right here. This is what you're looking for, and this is where you want to partner with the banks and go with them in the direction that they are taking the stock. So this is something that I want you to conceptually understand, because most retail traders, if I show you another example here, let's go ahead and delete this for a second, and we show you this example. Most retail traders try to trade breakouts and breakdowns. And so what they'll do is they're going to be buying up here, thinking it's breaking out of this level, and what they don't realize is that this is an actually supply zone, and so banks are still unloading their positions and selling, which takes it down and you take a loss. And then in the same idea but just reverse, people are shorting on these breakdowns thinking it's going to go down further because you see it on TikTok and reels of clips of just showing you that this works. And sometimes it can, but it's not just that simple if you don't know about supply and demand zones. If you did short it here, then you're in for a hurt because you didn't realize that there's tons of demand here, meaning banks buying and loading up, shooting the stock back up. So that's something I want you to understand. What we want to do now that we know where demand zones are in supply, we know that there's a demand zone right in this area, and we know that there's a supply zone in this area. So instead of just buying up here, what we're going to do is position ourselves with the bank. So we're going to start shorting up here and then ride it back down. And then when it comes down to this area, we're going to start buying down here and then ride it back up. Now you're still going to have a stop in place and a plan, and we'll go over that in just a second, but I just want you to get the general idea. So that way this can be easy to understand. Now, one other thing to notice is when you see these V shapes, you can visualize a diving board. Now, when a stock goes back up to this area, it's going to hit the diving board and go back down. That is what you're trying to conceptually see and understand. When you're trading live, things are not so picture perfect. Same thing with the consolidation and tank. You're looking for this area of interest where price is finding, can't figure out which way it's going. So there's a zone here and there's heavy supply and demand, and it hasn't picked a direction. Once it picks a direction, we know that this is heavy supply. And so when it comes back up, we got a little diving board here. You short into this area, you can ride it back down. That is the idea behind supply and demand. One thing I want you to understand is it's not just if you see multiple candles in a row, or you have to see at least 3 candles or 2 or 5 for it to be a supply or demand zone, because trading is not black and white like that. And some people will say you need to see 3 candlesticks going up or down to show that there's a supply zone or demand zone in that area. And I believe that to be false because I've been trading for 5 years and I've never ever seen trading work so black and white. There are some cases where it's picture perfect, but in most cases it is not. So I want you to see this. You may see cases that a stock just goes straight up on one candle, and that is dramatic, and that's what I want to see, right? Because we saw tons of consolidation. Maybe we saw a ton of consolidation right here, and then it just skyrockets, right? This is a good demand zone, this area right here. However, you might also see it where it just goes all the way up. And it might not be quick and it might be multiple candles, but it is very, very strong compared to previous action. So what I mean by that is if this stock is always making moves like this, and then the next move it makes like this, and then it goes like this again, and then it makes a move like this, these two moves stand out. That means that there's a possibility there's a heavy demand or supply zone that started this move, and that's what you're looking for. It doesn't just have to be one candle. It could be tons of candles. It just has to be a dramatic move. That's the key. Now I want to show you how to find supply and demand zones using the chart when you're trading. I just picked a random stock, picked a 30-minute time frame. It doesn't matter the time frame. Just for this example, I picked a 30-minute. For you, if you trade off the 1 minute, that's fine. This can be applied in many different time frames. Obviously, the higher the time frame, the stronger the supply and demand zone. That's something you need to keep in mind. But for this case, I'm going to show you on the 30-minute. We're going to start here. We just started seeing the trade day. Let's say we just start to see it and we see a massive move, right? What did we say earlier? We want to see consolidation. If you remember, we want to see consolidation and then pick a direction. And that's exactly what just happened. We had consolidation and then we picked a direction. So this area right here is a supply zone. Why is it a supply zone? Well, as I mentioned earlier, we're looking for that consolidation and breakdown. Now, how do you draw your supply zone? Everyone has their own way. Some people like to draw just the candle that started the move. Some people like to draw the last two candles. It just depends. In consolidation areas, I'm going to draw it on the entire consolidation because this is what was determining which direction it was going to go. And we know there's tons of orders in this area. So we know this is an area of interest and we're going to go ahead and draw that out. Now I stopped it here because I know a lot of people would see this and be like, oh no, like, is this another demand zone? Now it possibly could be. It is a bigger move, but it's nothing compared to what we just saw. So that's something to keep in mind. You got to put in perspective. What did the stock just do? What is it currently doing? How is it acting? So this doesn't really stick out to me. We're going to go ahead and press play. But now we have a little bit more of a dramatic move. However, it's still not as dramatic as this previous move. So we're going to go ahead and continue. And the stock went even further down. Now, what I see here is that it didn't even test this supply zone. However, we did build a whole new one because now we have a whole new move being made. As you can see here, this move, right before it created this long drawdown, it consolidated. Right before it made a dramatic move, just like it did this time, what did it do? Remember what we're looking for. It consolidated and then picked a direction. It consolidated and then picked a direction. That's what happened here. So now we're going to let it continue out. And here's what's happening. We're approaching and getting into our supply zone, right? And this is an area of interest. So what you would be doing, as we mentioned, is you are going to want to be placing an order short in this area. Now, there's multiple ways to execute this, which we're going to get into. So some people don't just want to short into it. Some people want to wait for confirmation. There's no such thing as confirmation in trading, but you can add other factors to it to give you higher odds. And what I mean by that is maybe you see a doji candle, maybe you see a bullish engulfing candle, a bearish engulfing candle, maybe you see a chart pattern form, something that helps add to your confidence, that gives you more confluence for the trade. Now we're going to go ahead and press play. Now, what I want you to see here is not everything is picture perfect. This actually held and fought in the supply zone for quite some time before it decided to pull back. This can happen. So whenever you take a position, you want to make sure that you have a risk reward and a plan in place. In this case, if you're entering in this beginning, you want to be risking above where the consolidation started. So if we look at this, the consolidation is right around here. You want to be risking right above that area. So in this case, the top of that consolidation is right there. And so you want to risk right above this area. So if you're entering in this area up here, you want to be risking up here. So we'll go ahead and show you an example. If you took a short right here and you're risking that area and you want to make at least a risk reward of 3-to-1, then all you need is right in this area. However, let's just say you weren't patient and you entered right when it got into this zone. Well, now you're only, in this case, you're only at a 1-to-1, and you're going to want to, well, in this case, you're only at 1-to-1, so you at least want 2-to-1 and maybe even 3-to-1. And I'll show you how to pick your profit targets later in another video. But in this case, if you just go a blanket statement, say you want 2-to-1, then you want it to come back down to this area and you know how to size in appropriately. Now I want to go ahead and press play here and see what happens. And the stock immediately tanks. And it tanks all the way down to, and I hope you see this everyone, to a new demand zone. And if you see this, you'll see that this was a very nice reaction that started a whole new move that was different from any up move before. This is a demand zone. So when it dips back down, to demand, you could be buying in this zone. Now we're going to go ahead and press play. And if you ended up buying in this demand zone, then you would be up pretty quickly, because if we go ahead and draw this out on what that position would look like, if you went ahead and went long, and let's just say you went long, you weren't patient, you went long right at the demand zone. In the cases the stock just rockets and it does a V. Remember the V we're looking for? It's right here. In those cases, what I want to do is I want to zoom in here and I want to draw the previous candle and sometimes the previous two, depending on how close they are. If they're like very close to each other, then I'll just go ahead and use the previous two. And what I mean by close is as in if these two tops are right next to each other, I'll just use the highest of the two. If there's a dramatic, like if it's this one and this one, I'm just going to use the first candle. What I'm looking for is what candle was right before the move started, which in this case is this red candle and this green one. It can be debatable. It could be the green one. It could be the red one. So I like to use both. And then from there, I like to draw my box using the high and the low. I like to include the wick. That's just me. And then if we zoom out and we go back to this area when it hits that zone, if you entered long right when it hits the zone and you risk right below that zone, just to get 2-to-1, you would have been 2-to-1 right here. In fact, this stock actually went up even further and it went up even higher to 8-to-1. Let's go ahead and delete this so that way you can see. Let's say you missed the opportunity to go short here. If you miss that opportunity and you miss the opportunity to go long, that's okay. You can still pay attention to these zones because they're still important. And there are cases where you could be faked out because it can always happen. So that's why you always want to plan and be okay taking a loss, because this is just probability. It doesn't mean it's always going to work. So if we go ahead and press play here and we go ahead and see it, in this case, you'll actually see the stock broke the demand zone. And after it broke it, what did it do? It immediately recovered. Now, this is going to happen. It's part of trading. Nothing's always perfect. It can happen to anyone, and you're going to take losses. Be prepared for that. Have a plan. But once it does this next move and immediately reacts, what do we have going on here? We have another V. And in this case, it's a very strong one. I mean, it's very strong. It's probably the strongest so far. That just indicates that we have a very strong demand opportunity right in this area. So now I'm looking at this and I'm saying we have demand zone right here. And what does it do? It pops right back up to supply. So if you miss the opportunity, you have another opportunity, and the consolidation got tighter because we can use this and update it, that you can risk off of. So if we go ahead and press play, you get short in that area. If you're getting short anywhere in here and you're using proper risk management, you're going to be up right away 2-to-1. And that's something I want you guys to see. One thing you might have noticed is the diving board. We have a stock going up, boom. Going down, it's a V. What happens here? The diving board comes back up to the diving board, rejects. That's the diving board idea. Some people can understand that very easily. Some people can't. Some people can understand the diving board. They can understand the consolidation drop, and they can understand the V. Everyone has different ways of understanding. So I want to show you all these examples so that way you can have an idea of what to look for when you're attacking the market. Now I want to go into a strategy that you can implement right away and practice doing this. Now, before I go into the strategy and how you can implement it right away and show you one of my trades and how I did it, I need you to understand that trading's odd based. It's based off of probabilities. It doesn't matter if you know the best strategy in the world. It doesn't matter if you execute perfectly, you can still lose. And that is the name of the game. You're going to lose. It's about risk management control. So you always want to make sure you have a plan. I'm going to show you how to do that right now. When you're making a plan, you want to make sure you're asking yourself these questions. Where am I wrong? Where is my target? Where's my entry? And where's my stop? Now, let me show you one of my favorite patterns that I like to trade. It's a strategy I use every single day, and that is the descending triangle. That is what we're looking for in this instance, and that is something you can implement right away, especially in this market. It's a trade I did recently, and so I know you can implement this. Now that you know we're looking for a descending triangle, let me show you how to enter in this stock. So let's just say we see the descending triangle. It's doing this. It breaks down. What we want to do is wait for it to pop back up into the supply zone where we take our entry and we know how to plan our stop, as I showed you earlier, and then write it back down. That's the goal here. That's the strategy, and that's the pattern. So let's go ahead and look for that here. Remember, comment below if you do see it. In this case, in this pattern, this is a short setup, meaning you're going to sell against the stock. You're betting that it's going to continue to go lower, and the best broker to do that on is Cobra Trading. You guys have to check out Cobra Trading. They've been sponsoring me for quite some time now, and I've been using them for years before they became a sponsor because they are hands down the best at finding shares to short on all types of stocks, and they have the lowest commission fees. And if you reference that you learned about them through me, it helps me out a little bit, sure, but it also helps you a ton as well because you get an additional 33% off of what is already a very, very sweet deal. So definitely check them out. I appreciate them, and I know you will too, especially if you use them. Now you'll see what we're seeing here is now we're probably seeing other areas, right? We're seeing that we have a little V here, then we have another V right here. It's not super dramatic, but it is there. And then what do we have here? Consolidation before a big move. I'm just drawing this out because I want to make sure that you see this. And then we're going to go down, continue, and here it is. I think you can see it. My eyes are already trained to see it, but we can see that it's starting to form that formation. And that's what we're looking for. So I'm going to draw this a little bit better because we do have tools to draw straight lines. It's super important because it can make it a lot easier. And we notice that we have our formation forming. We're waiting for it to determine, is this a supply zone or a demand zone? That's what we're looking for. We get the breakdown, and what happens next? Now we need to draw out that this area, which again, before it broke down, it consolidated. We had some consolidation. We want to use a consolidation. Now this is where it becomes a feel thing. Nothing's black and white. You don't want to use this because then you're like, well, what do I enter and what do I risk? Like that just makes no sense. You want to ask yourself the question. Remember the plan. Let me draw it out. We did this. We saw it break. We want to see it pop back up. Where would this get to where I am absolutely wrong? And in my opinion, it would be above this consolidation area. Let me draw a line there. You'll see it topped out here twice and then made a lower high. You could use this area or you can use this area. It's totally up to you. I personally will probably start off using the previous highs because in this case, if this is the pattern and it breaks, let's just draw it back up. If it breaks and breaks the pattern, this is no longer valid because it should make lower highs, right? Remember this pattern. It's a lower high, lower high, lower high, lower high. If we make a higher high, that is not the pattern anymore. So that's when I'm asking myself that question. So I'm combining supply zone with the pattern that gives me better confluence, gives me better confidence in placing my trade. So my goal is going to be to enter anywhere up here. And I did play this trade. I want to make sure that you all can plan this out. Before I show you how I traded it, feel free to comment. Let me know your plan before we go ahead and press play. And we're going to go ahead and do it now. So we get the pop-up. You're going to want to enter in this zone. Remember, risking above here. So let's go ahead and draw that real quick. And 2 to 1 is right here. So if you enter anywhere in this area and you're going to risk above the zone and you want 2 to 1, all you need is this little area to be filled. So if we go ahead and press play, it actually fills up and goes even further. And it comes back up and tests once again. So this is what I want you to see. These zones could test multiple times. It tested, failed, and then it came back up, tested again. You can enter again, and then it failed. So this is an opportunity you can take advantage of multiple times. Do you see why I'm saying this is so important? How you need to see conceptually how to see it, then see it in action. And now I'm going to show you my trade. So now in my trade, you can see that I didn't do it perfectly, but because of risk management, I was able to plan the trade effectively and manage my risk. So that way my winner is much bigger than my loser. In this case, I first started off entering a little bit before the supply zone because I had a little FOMO. I thought I was going to die without me, and that can happen. If you do that, just make sure your size is very small because you know you're going against what? The plan of a good trade. Instead, I did real small, cut it, and then once it popped into my supply zone, I hit it with full size, risking above the supply zone as I mentioned, and wrote it down and did very well on this trade and actually recycled this position, which is a whole other concept we'll go into later. But let me go ahead and zoom out real quick and explain how I did this trade. Whenever it popped back up into this area, you'll see it went to the 430s. I was risking the 450s. There's a little secret between the half and whole dollar. That's something that we'll go into later as well. But I already showed you how to draw the zone because you don't need to know that to do this trade because we already talked about it. Boom, it goes into this area. You short here, risking above here, and write it back down. Now, when it pops back up, you can recycle, which we'll talk about later, but I want you to see nothing's perfect and you don't have to be perfect to execute this strategy. So don't beat yourself up if you make a mistake. Just make sure you're not risking so much. Risk $1 to make 3. Risk $1 to make, risk 10 to make 20, 10 to make 30, because you are learning. If you're learning supply and demand for the first time, take your time. Don't beat yourself up. Give yourself a full month of just practicing. If you're patient enough before you even start trading. And if you are trading, use a demo account. Definitely use a demo account. And Cobra also offers a demo account, so check them out. We're giving away 48 meals this month. You're at your desk, you're busy, you're trading, you're working. You don't have time to go make a delicious, healthy meal. Instead, what do? You order some fast delivery service that isn't healthy. Don't worry, we got you covered because we are partnering with Icon Meals, who creates healthy, delicious meals, and they deliver it right to you. My favorite meal from Icon is the Titan Burrito. It's a breakfast burrito that is filled with egg and potatoes, all the good stuff, and it comes with salsa because, you know, salsa is the best. Now, there are many meals to choose from. That was just my favorite. The way you enter to win is just comment below what you had for lunch today, and then click the link and follow the instructions.